Fast food stocks, they are under some stress this morning. This part is not funny. Starbucks reported some disappointing preliminary fourth quarter results and pulled guidance for 2025. That probably not unexpected in some ways. We'll talk about it. Meantime, the CDC linking McDonald's to a deadly E. coli outbreak. Join us right now is Jon Tower, Citi's restaurant analyst. Good morning to you.
Morning.
Let's talk Starbucks first. My sense, I don't know if your sense, was always going to be that once Brian was put into this new role, that they were going to probably not report great earnings. At some point, might throw everything in the kitchen sink so that, frankly, a year from now, they can actually try to reposition the company and actually have a whole lot of better numbers. How surprising was these preliminary results to you?
So from a top-line basis, they were surprising in that the U.S. business, with traffic down 10%, came in worse than what we were anticipating, and I think what many investors were anticipating. The earnings side of the equation, I'm more on your page in that we were all expecting effectively a kitchen sink quarter, given that he's starting, from effectively the ground up here to try and rebuild this business. Pulling in the fiscal 25 guidance, not that big of a deal. Effectively, gives them some time to build out a plan to really get this business going in the right direction over the next 12 months. But I think, look, what his letter or the transcript effectively highlighted was the fact that this is going to take a long time. This is not a simple fix. There's going to be reinvestment back into the product. There's going to be reinvestment back into labor. There's going to be reinvestment back into the stores, all of which is going to take a good amount of time and a lot of capital, which means that earnings growth might be under pressure for quite a bit, not just a 12-month window.
So let's talk about those top-line numbers, because you're looking at stores in the U.S. off 6%. You're looking at stores in China off 14%. Now we're talking top-line revenue numbers. What are they going to have to do to actually move the needle there? And to the extent that we've heard hints around a strategy, and I know we'll hear a lot more next week, do you have great hope? What's your take?
Boy, I think this is going to be a long process. Meaning, this is not a simple fix. They need to figure out how to address the throughput issues at the stores, the menu complexity, which is tied to the throughput, and more importantly, affordability to the customer and the perception around that. And that doesn't mean they have to go out and necessarily cut their prices, but I think they need to figure out ways to give more back to the customer. A simple example would be, the, say, dairy substitutes that some of us might use, the oat milk, the soy milk, et cetera, oftentimes where you're getting upcharged. Perhaps a Starbucks can say, you know what, we're just going to keep it the same base as what you'd get for regular dairy. That's one way that you can kind of stress affordability, given that you're the brand of scale across the globe. So that's one of many measures. Domestically, they likely need to rejigger the store formats to address kind of the mobile order and pay side, as well as the in-store side. In China, that's a whole other conversation that could go on for
China,
hours.
let's go back to the U.S., because I do think one of the things, and I don't know if you watched Brian's video yesterday, where he was talking both, I think, to the public, but really to the partner, what he calls the partners at the stores, the employees, the efforts that they want to undertake to try to make that experience in the store feel more like a old-style Starbucks, an old-style coffee shop. And what I was hearing between the lines was really trying to reprioritize the in-store experience to some degree relative to the mobile experience, because in some ways the mobile experience has almost taken over the store. Yeah. How much do you think that that's a plausible scenario?
I would add to that,
Yep.
Not only that, but also trying to get back to the basics of coffee and maybe not having so many crazy drinks that are so hard to make behind the counter, too. Because I listen to that message, too. Yeah.
But both of those, I think, are important. However, keep in mind, both of those are significant channels of sales for Starbucks today. 31% or so of their transactions in the U.S. come from that mobile order ahead and pickup channel. So anything changing that is likely going to change the direction of their sales. And then if you look back, pre-pandemic to now, a large chunk of that cumulative 50% or so check growth has been driven by the rise of these alternative beverages. And so the moment that they start pulling those from the menu, there's likely going to be a sales headwind. So it's a really difficult needle to thread. Now, Brian and his team, I think, is probably the best suited executive to get up there and try and fix this. I just don't think it's going to be an easy, quick 12-month 24-month type of turnaround, especially the idea of.
Sure. The numbers, 31% growth from when, 50% growth from when? Those are really interesting.
31% is their mix of transactions, on the mobile order and pay side. The 50% growth is the cumulative check growth in the United States since pre-COVID, so effectively 2019.
Hey, John, let's just real quick pivot to McDonald's before we let you go. This E. coli outbreak obviously is going to be a problem, at least for the next couple of weeks. But beyond that, does it create a brand problem? Do you think that there are folks that either don't come back or say they're going to stay out of the stores for, for months on end? What is the real impact of this, and how do you see it?
Yeah, I think it's going to be temporary in nature, and that's not to dismiss anything that's happened already to the folks that got sick and obviously a death. It's not great, but I think they've got the brand and, importantly, the protocols to address this across their supply chain. So it's first making sure that it's contained. Sounds like it might be. Then it's going back and effectively, admitting to the public that something happened and we're fixing it. Third, overcorrecting. And I think they're going to go in that sequence. Likely means that in the near term, to your point, sales are going to drift much lower for at least temporarily, perhaps a couple of weeks. And then it'll slowly build back up as they regain customer traffic. And look, the big thing for them was they came into this window effectively with an affordability issue in the eyes of the consumer over the past 12 months. They've been improving that since the late June period. But this is a step back for them in the U.S. So it's not a great setup, but, a 7% reaction on this news feels appropriate, given that the temporary headwinds that it's going to provide to sales domestically and, the build back that's going to take a little bit of time.
John, I want to thank you for your perspective on all of it. We will be watching Starbucks next week, and I'm sure we'll be talking to you a lot more about it in the coming weeks. Thanks.